In the following video, we're working through chapter 4, and in chapter 4, we speak about the preparing the journal transactions, transferring to the general ledger, and then preparing the pre-adjustment trial balance. So in chapter 4, we're now dealing with the double entry system. And the double entry account, which means for every debit, there should be a counter a credit. Now, the debit side and the credit side represents different things depending on the account involved. So, if we look at the asset account, firstly, a debit side in the asset account, meaning an increase, and a credit side representing a decrease. For liabilities, the debit represents a decrease, whereas the credit represents an increase. And for owner's equity, the debit represents a decrease, whereas the credit side represents an increase. The aim of the debits and the credits is to ensure that each account balances at the end of the period. So if you look at the asset account, we went through, the liabilities account we went through, but the owner's equity account, remember, is broken down into 4 accounts. So we can see that even though owner's equity increases on the credit side and decreases on the debit side, capital, which would increase owner's equity, therefore also increases on the credit side and decreases on the debit side. Income, which also increases owner's equity, increases on the credit side, decreases on the debit side. Whereas expenses, which decrease owner's equity, increases on the debit side and decreases on the credit side. Because remember, the more expenses increase, the more owner's equity would decrease. The same goes for distributions. The more the distribution account increases, the more owner's equity account would decrease. Distributions refers to your drawings. So if we look at the text given on page 116, it says, assets on the left-hand side of the equation thus, increase in assets is recorded on the left-hand side, account as a debit, and a decrease in assets recorded on the right-hand side as a credit. Liabilities on the right-hand side of the equation, thus an increase is recorded on the right-hand side and a decrease is recorded on the left-hand side. So we can see what they mean here. When they're saying this is the right-hand side of the equation, so you see liabilities and equity on your right-hand side, which means they increase on the right-hand side. Assets is on the left-hand side, which means assets increase on the left-hand side and decreases on the right-hand side. So that's a nice way to look at it. What we're going to go through in this chapter is the general ledger and the general journal. Now, the format of the general journal is given. It says a format of the general journal shows the date of the transaction, which is important, the name of the accounts involved, which account should be debited and which should be credited, a reference to the general ledger, the amount, and explanation of the transaction, also known as a narration. So you can see here a date, when the transaction took place, the description, which means which accounts are involved, the reference here to the general ledger account, and then it shows which account should be debited and which account should be credited. Whereas with the general ledger, we post from the journals to the ledger, and the ledger account looks something like this. So the ledger account is a T account, which represents a right-hand side and a left-hand side, depending on the type of account it is. And we can see the detail that must go into the general ledger is the date, the name of the other account affected, a reference to the page number of the journal, and the amount. So it shows here, account number 1 is being debited with account number 2 at this amount. So when we look at examples, we'll be able to see how the effect goes. So let's look at the first transaction. The first transaction we've dealt with before, it's Simon Concepts, Smart Concepts with Simon. So Simon Smart took money from his savings account and deposited this into the account of the business. So now we can see the accounting equation which we've done. And the accounting equation shows here that the assets are going to increase and owner's equity is going to increase. But how would this affect the journal? You can see that there's a double entry, which means there's a debit and a credit. And here you can see how it affects. And this is the format we go. So we went from accounting equation, which we've dealt with in the previous chapter, chapter 3. Chapter 4 now refers to the general journal and the general ledger. So look how it goes. Bank is increasing on the debit side. Capital is increasing on the credit side. And remember, in the general journal, the debit entry is always first. How do we take this and transfer it to this? We can see here the bank account being an asset account is increasing on the debit side. Capital account being an owner's equity account is increasing on the credit side. So let's look at this transaction more in detail. So we said that the owner contributed 950,000 rand. So how would this go into the general journal? Now let's add a date as per the transaction given on 2nd or 1st of January 2019. Right, so the general journal says a date, a description, which account should be debited and which account should be credited. The date is the 1st of January 2019. The description now, the same that we followed in the past. Remember, when we analyze, when we did the analysis of transactions, what did we say? The analysis of transactions, we broke it down. We said first, identify the accounts involved. Then we said, classify the accounts. We then said, determine if the account is going to increase or decrease. And number 4, we said, allocate the amount. Now we're adding number 5, and now we say, should the account be debited or should it be credited? So we have this layout of the analysis of transactions for ourselves. So it says the owner contributed 950,000. We identify the accounts involved, bank and capital. Because when the owner makes a contribution, it's done as capital. Bank we classify as an asset. Capital we classify as owner's equity. What is happening to the bank account if the owner contributes? The bank account is increasing. What happens to owner's equity if the owner contributes more? His contribution increases owner's equity. And he contributed 950,000. Next step is to now say which account should be debited and which account should be credited. Bank is increasing assets and assets increase on the debit side. Capital increases owner's equity and owner's equity increases on the credit side. So now we know our debit and our credit. So we go to our general journal and we say the first account being the one that's debited is bank, and we enter in the debit side 950,000. The second account, which is the capital account, is being credited, and in the credit side we enter 950,000. So this is how we enter transactions in the general journal, but we keep this in the back of our minds because with each transaction we're doing an analysis. And when we analyze the transaction, we're saying, looking at the transaction, we identify the accounts involved, classify the accounts. Should the account increase or decrease, that is the effect. We allocate an amount to it, and then we say, okay, now that we know, so if we're saying assets increase, then we know it should be debited. How would we enter this into the general ledger? So if we prepare our general ledger, T account, and I prepare the bank account. We say there's the bank account, and now we have to say this is the debit side and this is the credit side. Right? That's the debit and that's the credit. Debit is always on the left hand side, credit is always on the right hand side. What it represents for each account is what is important. So now we have to go. What date should we enter? 1st of January 2019. And we're saying that the bank account is increasing. Now this part over here, the description here says, why is the bank account increasing? What is the reason? So we're saying the bank account is increasing because the owner made a contribution, 950,000. We see that the bank is increasing because of capital. So now if we open the capital T account, and then we have to ask ourselves the same question. So we open our capital T account first. And I'm going to put the debits and the credits. And now we're saying capital in our date, 1st of January 2019. And we know that the capital account is increasing as we said here. Now we ask ourselves, capital is increasing, why? What did the owner contribute? He contributed cash, and that we call the bank account. And how much? 950,000. So in this transaction, that is how we do the general journal entry for it. And this is how we would do the general ledger entry for it. In the series of videos following, we'll be working through the exercises in the question book.